David Bahnsen joining me now to cover the market. The market is now pricing in, what, a 90-plus likelihood of a quarter-point rate cut on Wednesday afternoon. Do you care, David? No.
Well, no, I don't care, but I also think that one of the reasons we can afford to not care is it's so obvious it's going to happen, that there has been about 2 weeks now of the futures market making it very clear. I think there'd be more volatility if this were not happening. You saw about a month and a half ago when they called into question the idea of this rate cut, it did bring a lot more volatility to markets, but it's a little outside of what our primary focus is. And a lot of the things we're focused on, they're moving in the right direction, Stuart.
Okay, before we get to your dividend pick, I want to point out that you pointed this out to me. Capital investment outside of AI is very low. It's almost non-existent. That's bad for economic growth, you think?
Well, it is. I mean, you need capital investment to drive the productivity, drive hiring, drive wage growth. For all the talk about affordability, it bothers me that we're not talking about the other side of it. There's two ways things become more affordable. Prices coming down, which almost never happens in our country, and wages going up. And I'd rather us focus on wages going higher because that's something we can actually do by fostering economic growth. But you can't only do that by investing in one sector and over-investing in it for that matter, which is this AI story. So yeah, I want to see capital investment across other businesses, and I'm praying that'll be a story in 2026. I think that the tariffs have affected this to some degree.
Okay. Your dividend pick is Pepsi. What do they pay and where's it going?
Well, it's a 4% dividend yield. And so I think whenever you get a company that's a more value-oriented company that is trading at a lower multiple and has a better story, look, you definitely are investing in Pepsi's management. They have an incredible track record of making good strategic decisions. It's not just a soda pop company, huge snack business, huge bottled water, sports beverages. So they're very diversified in food and snack. And a 4% yield that has grown every year for 50 years. I think you know how I feel about that, Stuart.
Yeah, I do indeed. The 4% is good, especially if it keeps on growing. David, you're all right. Thanks for joining us this morning. We'll see you again soon, I hope.
Thank you.